In the autumn statement, the Chancellor announced that full expensing, which was previously announced in the budget early this year as a temporary measure, will remain permanent for all companies investing in capital expenditure. What this allows is 100% write-down of capital costs in the year the expenditure is incurred. For most, it probably won't affect them too much. The annual investment allowance remains at £1 million per year, so it's only really of note for those companies who are using up their entire annual investment allowance. It gives further incentive to invest in capital equipment beyond those amounts per year. The Chancellor confirmed the merged R&D scheme will go ahead from the 1st of April 2024. This will take effect for accounting periods starting on or after that date, and effectively is the current RDEC scheme, Research Development Expenditure Credit scheme, and replaces the SME scheme for most companies. The way that works is a 20% gross credit, which will be taxed at the main rate of 25% corporation tax for most companies, profitable companies. There was a small change that was announced today, which is that for loss-making companies, the tax credit will be charged at 19% corporation tax for loss-making companies, which means the rate of relief is slightly higher for a loss-making company than for a profitable one. For a profitable company, the effective rate of relief will be 15%. For a loss-making company, the effective rate of relief will be 16.2%. This is slightly lower than the current SME scheme, but it is a slight improvement for loss-making businesses. Alongside that, there remains the SME intensive R&D scheme, which effectively follows the same rules as the current SME scheme, with an additional 86% enhanced expenditure and a 14.5% tax credit. Again, there was a slight change announced today, which is that the threshold for companies to become eligible for that scheme has been reduced from 40% to 30%, which means that in order to be eligible for this scheme, the company must firstly qualify as an SME, meet the thresholds in terms of turnover and balance sheet totals, but their total expenditure, qualifying R&D expenditure going in the claim, must be at least 30% of the company's total expenditure for the period. The effective rate of relief for an SME claiming under the intensive SME R&D scheme will be between 16% for a profitable making company, or up to 26% for a loss-making company if they surrender 186% of their qualifying expenditure for the 14.5% tax credit. So the SME intensive scheme does still remain quite generous, and more generous than the RDEC scheme that most companies will claim under. But the scheme does overall represent a cut from the previous rates that we had before April 2023. What this means is that there is a lot more complexity in the R&D legislation. There are quite a lot of different rates available and applicable depending on the company's position, whether they are profitable, whether they are loss-making, whether they are a small or a large company, how much of their expenditure is spent on R&D. What this means is it's important to make sure that you are getting the correct scheme and the correct rate of relief. And with HMRC's tightening approach to scrutinising R&D claims, it's more important than ever that you use an R&D specialist who can help guide you through that process and ensure that the claim is maximised and that the claim is made correctly.